lot of the products that we've developed have come from these very, very harrowing experiences of sitting with a mother who's just lost a child, and hearing her story and realizing that we've got to do something about this. And so health insurance was a product that I felt we would never ever be able to do, but that I made a promise to a woman in a slum in Bangladesh 10 or 15 years ago now, and I promised her we'd find a way to do it, and we have, and we've done that.
This episode of Search with Purpose wouldn't be possible without my day job at Exige International. Exige is an executive search firm providing talent within the Western European market for a whole range of financial services organizations. We, as a group of executives at Exige, believe that recruitment can be done differently. It can be done in a way which serves the needs of both our clients and our candidates, and also the world in which we live. We've committed to not only finding the very best talent available in the world, but also to giving 10% of our search revenue to forest protection charities to ensure that the future generations have these treasures intact and can enjoy them just as we have. So if you'd like to find out more about our work here at Exige, then please do check out our website at exigeinternational.com. That's EXIGE international.com. Or of course you can find me on LinkedIn, and I'll be very happy to have a conversation. In today's episode, we meet Richard Leftley, one of the true pioneers of microinsurance in Africa and in Asia. Richard brings over 20 years of experience in these most demanding markets. He'll share what it takes to raise $25 million from the Gates Foundation at a time when the Gates Foundation wasn't even thinking about microinsurance. He'll share with us why he believes success in these most demanding markets is about distribution more than it is about a product. And he'll also tell us on a personal level what it takes to keep going in an incredibly difficult business after 20 years. I hope you enjoy the conversation as much as I did. So without further ado, I give you Richard Leftley. Richard, thank you very much for joining me today on the show. It's really nice to have you here.
It's a pleasure to be with you. Thank you for having me.
Thank you. Richard, what got you interested in microinsurance?
Absolutely. Well, for me, I think it was kind of a combination of things. I remember very clearly being a 28-year-old, kind of fairly idealistic reinsurance broker sat at my desk in London and kind of looking at the people that I was working with and thinking, is this really what I want to do for the rest of my life? Do I really want, you could literally kind of see the generations of promotion around the office and think, in 10 years I could be that guy, and in 20 years I could be that guy. And that kind of, they were great people. It just wasn't something that really kind of filled me with passion, that I wanted to do with my life. And that combined with, just a really solid understanding of what it looked like to be living in Africa, to be facing the kind of risk that these people kind of faced every day. And I remember very clearly looking at some statistics from Swiss Re and thinking, the number of people that get affected by natural disasters in the emerging world, and the cost of those events, there's just such a misalignment. And that kind of resulted in me taking a couple of weeks off and going down to Zambia, to kind of hanging out in a village, trying to help build a school, and in the process just really living in those communities. And I remember asking one of the families that I was living with kind of why they were here, why they were still in this village, and they got pretty angry with me actually, and kind of went off and came back with a snakes and ladders board and said, look, we're just trying to work our way out of poverty. We're trying to work our way to a better life where we can feed our kids and and pay for things when they happen. And this one family, the lady told me, okay, well, look, we started off life here in the village, and then we ended up in the capital city in an apartment with a motorbike, as middle class people. She had been a school teacher, her husband was a security guard, and then, they got sick, and he'd gone on and died, and they'd spent all of their money on medicine and then on the funeral, and here they were back in the village. And she said, look, I know you can't stop bad things happening, but can you help me with the cost so that when disaster strikes, I don't slide all the way back down one of these snakes down to the bottom of the board? And a light bulb went off in my head, and I said, well, that's insurance. It's something that I know about. It's something that I understand from the work that I've been doing in the reinsurance market. And I started to look into why these people didn't have access to insurance. At that point, 97% of people didn't have an insurance policy and didn't have access to it. And so that was really the thing that started off this whole journey over the last 20 years of creating Microensure.
Fantastic. So how do you go from that idea, that recognition that there's a need, that experience in the village with snakes and ladders, how do you go from recognizing that to actually creating a company? Tell us about that.
Yeah, actually looking back on it, it's slightly terrifying. And I kind of, if I had a time machine and could go back and kind of give some advice to 28-year-old Richard Leftley, I probably would have told him to stay a reinsurance broker. And I certainly didn't have a business plan, and I certainly didn't even really have a plan, let alone a business plan. I didn't even know what a business plan was, I don't think. And so, I just, like all great journeys, and it sounds a bit corny, but I just kind of put one foot in front of the other. And so, for me, it was, okay, so at a very high level, 97% of people don't have insurance. I think I know why that is. I think it's to do with the fact that the products are too complicated, and the way in which the products are being sold, which is predominantly being led by a kind of agent. And once you kind of got an agent and you have to pay his or her salary, then that starts to dictate a whole number of things. The premium has to be of a certain scale in order to justify the agent. And if the premium is of a certain scale, then the sum insured is of a certain scale. And if the sum insured is a certain scale, then you need to have a complicated product with medical underwriting and all of the things that we do in the West. And that isn't appropriate for the 97% of people living on low and middle incomes in Africa and Asia. And so, it started with that kind of an understanding. And so it was like, and so where are we going to start? And I identified that there was an opportunity to work with the kind of microfinance organizations. So these were banks and kind of semi-banks that were lending money to groups of women. And that's where I started. I embedded myself into those organizations. I started kind of finding ways to extend insurance through the loans that they were giving to these groups of women. That taught me an awful lot. It taught me the products that they needed. It taught me a lot about kind of some of the customer journey, the features of the customer journey. And then, of course, you started to then say, okay, and now what? So microfinance only had about 150 million clients out of the 4 billion people that don't have insurance. So it's a relatively small subset. So then you start saying, okay, who else can I work with to distribute my insurance products? And that led us on through a whole range of different organizations, including, mobile phone organizations, electronic wallets, ride-hailing companies. And so you start to kind of then learn how to do that and distribute insurance through those organizations.
What was the most, thinking back to that time then, that beginning, what was the moment that you realized you had something that could work? Is there a project or something that really made you think, yes, this is it? So what was the moment you thought, I have something here and it can work?
Well, in the early days, I mean, this was in 2002, this is 20 years ago. This is a long time before insurtech and fintech and all the things we talk about now. I mean, even mobile wasn't really a massive thing at that point. I mean, the big thing at that point was HIV. So, this is a long, long time ago. And at that point, a lot of what we were doing was being financed by people like the Gates Foundation. And so, they were giving us money to do this more like as a philanthropic enterprise, a social business, rather than a fully functioning kind of business. And I think for me, the kind of the breakthrough moment probably came around 2007, 2008, where we had been working for some years at that point, and we had a bit of a breakthrough. We started to work with the mobile phone companies. So they started to show interest in using insurance to try and kind of change consumer behavior. So they had an underlying business problem. Their issue was a kind of issue with kind of customer loyalty. So they had a lot of customers, but those customers were very disloyal, and they were switching around between different networks. And what we figured out was that no one really wakes up wanting to buy insurance, but people do wake up worrying about the risks they face. And so we used that kind of understanding to try and make the customers more loyal by offering them insurance in return for increased loyalty. So if they topped up more, if they topped up more of their airtime with one network, then they would get insurance as a reward, and it had a dramatic effect. So it was such a kind of it was such a breakthrough. We signed up 20 million customers onto insurance for the first time in just 150 days.
Well, that makes me think like about what do you think people get wrong about or misunderstand about selling insurance in Africa and in Asia?
I think the most common mistake is misunderstanding that this is a distribution challenge, not a product challenge. So, you know, time and time again, I see, especially insurance companies, I mean, it's a very product-led industry. And I think it's one of the last remaining product-led industries. And if you don't believe me, pull out a pitch deck from an insurance company. And normally what it is it's kind of like, this is who we are, this is how fabulous we are, this is how strong our balance sheet is, these are our partners, and then it ends with, these are our products. And so, you know, it always goes to, here are our products. And for me, that's kind of irrelevant, because once you do that, then you just become a commodity. Once you do that, then, you know, the next logical question is, okay, let me take your products and let me go find out if I can get a better product or a better price. And actually, when we're talking about microinsurance, the most critical element here is the customer journey. The most critical element is working out how to remove friction, because at the moment, when there's 97% of people who don't have insurance, they wake up every morning and they can't be bothered to buy insurance. So in many ways, we're not competing with AIG or AXA or any of the insurance companies. We're actually competing with apathy. And so if you make it at all difficult to sign up and use insurance products, then people will just default to their kind of to their existing position of not buying it. And so friction needs to be removed from the sign-up process. So how do I sign up? How do I pay for? How do I use the product? And if you can remove all of that friction, then you can have very, very dramatic kind of end results. I think it's true, and I think I've seen certainly in my time that you can succeed with a bad product, but with a really good kind of frictionless digital customer journey. But you can absolutely fail with a great product and a terrible customer journey. And so we've seen that play out time and time again, and I think that's where most people make mistakes.
So I hear from that in Africa, in emerging markets in Asia, where you're trying to get to customers to develop a solution with them, the way in which you deliver it to them is almost as important as what you're giving to them.
It's more important, absolutely. More important.
Yeah. I mean, that does bring to mind a question for me, though. It's like, why do people who may be struggling to feed themselves and their family, why do they need insurance?
It's a good question. So, I mean, certainly, I think, you know, if you go into the slums in Nairobi and stand there and say, anyone want to buy life insurance? I mean, there won't be an orderly queue formed. And it's true, like none of us wake up wanting to buy insurance. And if you're poor, you really, you know, if you're a low-income African, you really don't wake up wanting to buy insurance. You wake up with many, many things on your mind. And I think that's the issue. We can't sell insurance to these people, but we can sell solutions to the risks they face. You know, I remember sitting down with one of our clients and I'm talking to them and I asked them a question around what causes you to spend money in unexpected ways. And she kind of, it was brilliant. And she kind of sat back, you know, she hasn't got any teeth in her, you know, in her kind of mouth at all. And she kind of sits back and she just kind of tries to think and she leans forward and she says, you know, I eat risk for breakfast. You know, like, the most kind of profound, and you kind of think, what is, you know, and basically what she was trying to say is like her entire life is about risk. She wakes up, you know, she's worried about how do I get water without being attacked and losing, you know, and having my money stolen. How do I do this without kind of being, you know, assaulted? You know, and so her entire life is about risk. And so when you address those risks, so, you know, instead of trying to sell life insurance, you say, hey, if something happens to you, would you like your kids to finish school? Then that's a very different conversation than would you like to have life insurance? And that's what I mean about the customer journey. It's not about the product, right? If you position the product front and center and say, this is the product I'm selling, who wants to buy it? You'll get no one to buy it. But if you say, you know, if you embed into a brand that people trust, so a mobile phone company. And why do they trust it? They trust it because they're using it every day, and because they top up. And when they top up airtime, they're pay-as-you-go customers. And when they buy airtime, it works. And so when that brand says, hey, I noticed that you're sending money home to your family because you're a worker, you're a domestic worker in the city. I see that you're sending money home. Would you like your kids to finish school? If something bad happens to you and you lose your job, then you trust that brand, and you trust that actually, if something was to happen to you, then your kids would be taken care of. It's easy to pay because you can pay in daily installments by small deductions from your airtime balance. So there's no pain associated with paying. It's easy to sign up because all you have to do is press one or press a button and you're signed up. So suddenly it's from a brand you trust. It's frictionless to sign up. It's frictionless to pay. And it's about a risk that you're worried about. It's not a product that you're being sold. It's about something that you woke up this morning and thought, I really worry about how my kids would finish school if I lost my job. And people will respond to those products.
So do I hear in that, so this distribution channel, getting money, getting a distribution channel which works for your customers, and then when it gets paid out, how do you get that money to them? Is it always via the mobile phone, or is it how in these developing markets where they maybe don't even have a bank account? How do you get the money to them?
Sure. Well, they certainly don't have a bank account. So what we do, firstly, it's kind of ingenious how they get to us. So, the claim for us is really the essential part, right? And so this is where you get to kind of earn your money, right? Where you get to demonstrate the value of the product. And so, firstly, we actually work with our clients to try and get them their claim paid. So they phone us up. Normally they would phone us up, or they'd make contact with us through a number of different channels that we have. And we end up having a chat with them. We normally end up calling them. And we ask them about what happened, and we ask them to go away and try and get some kind of documentation for us. And they say, okay, and off they go. And then we set ourselves a reminder kind of corporately on our system. And after 2 days, if we haven't heard from them, it actually pops up on someone's screen, and it prompts one of our agents to call them back and say, how are you getting on? And 9 times out of 10, the client says, well, we're struggling. We went to the police to try and get a report, and we couldn't. They want some money, they want some bribes or whatever. And we say, okay, then don't worry about the police report. We don't want you to pay them any money. Could you tell us about someone in your community who knows about what happened? And they say, oh yeah, the chief or the imam or the pastor or the local official, he knows about what happened. Here's his mobile phone number. So we call that person and say, hey, tell us what happened to this person. And they tell us the story, and if it matches up, then we say, okay, now we can pay the claim. So and we've paid claims using kind of a snapshot, a WhatsApp picture of a paper handkerchief that someone's written on it in a bar, saying, yeah, I know this person, and their mother died yesterday. And we pay claims. That's what we've used to pay claims on. And then we ask the client, well, how would you like the money? We can send it to your mobile phone account. We can do that to your mobile wallet, or you can rock up to this bank branch and get the check, or this, we've got a relationship with this mobile phone company, so they've got shops on every street corner. We can send the money there, and it's up to the person what they want. And interestingly, our clients seem to want to interact with us digitally. So they want to buy the policy digitally, and they want to pay for the project digitally. But when it comes to the payout, which is a few $100s, they actually want it in cash or check, which is really weird. But that's how people prefer to do these things. They don't seem to trust. They seem to trust mobile money for small payments of a few pennies, but they don't trust it for a few $100s.
So I'm hearing from that there's an entirely different way of doing business, not only in the way that you think of selling the product, but in the way that you actually fulfill on the product. And there's a whole host of cultural and functional, practical considerations, which maybe we don't even think of in the West. So when it comes to creating products for these markets, as a white man who lives in the UK, how do you create products for people in those markets with those needs, Richard? How do you do that?
Yeah, it's a good question. I think there's a mantra which is simple is best. which we try and apply. And so, we started off, with a kind of life insurance policy, and you say, okay, so typically in life insurance policy is you pay me $1, I'll pay you $500 if you die. And then you start looking at it and saying, okay, now what else is in a life insurance policy? Okay, well, normally it says you have to be between 18 and 65. And then you ask the question, well, why? I mean, well, the reason is because normally it's rich people like me and you buying $1 million or £1 million policy. And therefore there has to be an upper age limit, because obviously once you get past 65, you start to become a bit of a risk. But then you say, okay, well in Africa, the average age is 25. So if I sign up 1 million people, the average age is going to be 25. And of course, there'll be 3 people out of 1 million who are 90, but the majority will be 25. And actually what you don't realize is that in Africa, no one actually, well, not many people know how old they are. So they don't have a birth certificate, they can't prove it. And many people don't actually know exactly how old they are. In fact, I've met people time and time again who the dad has a government issued ID who's 30, and the son, his son, has a government issued ID that also says he's 30. So, you're operating in an environment where people don't know how old they are, they can't prove how old they are. And does it really matter? And so you start asking yourself the question, well, why do I need to know how old they are if the average age is going to be 25, if I can sign up enough people? And so you start to just kind of like every single thing in a traditional life insurance policy or accident policy or hospitalization policy, you just start to ask yourself these questions. Well, do I really need to know how old they are? And because the premium's $1, am I actually going to go to northern Pakistan and contest that the guy is 64 or 66? Of course I'm not. Not for $1, and certainly not to northern Pakistan. So it's kind of, so you start to ask yourself the questions around, like, why do we have these things in insurance, and are they actually relevant? If I can get 1 million people to sign up, then it's the law of large numbers, right? It's kind of that's what insurance is about. So actually, when we first started doing it, it's a long way. Sorry, answering your question. But I mean, when we first started doing it, we would sit down with clients and we would ask them a lot of questions and then try and design the product around their needs. But what we discovered was it was a little bit like asking them, do they want to go on holiday to Tembe or Hawaii? They have no idea what you're talking about. They've never had insurance, so they don't understand how to design an insurance product. So actually what we did was we ended up designing products based upon our knowledge and our experience, and we'll launch them and we'll get people to use them. And then after we've seen a number of claims be made in a community, and we then go and ask the clients, okay, what's your impression of this product? Why did you buy it? Why didn't you buy it? What do you like about it? How's the price point? How was the claims journey? What did you think about it? And then we get real data, and it's really interesting. So we actually end up designing products as you said, as white people sat in Cheltenham, based upon 20 years of experience of selling to people. But we do sometimes get it wrong.
So is there a future in microinsurance? If I'm someone in insurance right now, is microinsurance important still now? And is there a future in the industry?
I guess the real question should be, if you had a time machine, would you do it again? 20 years is a long time to spend doing something, isn't it? And I think the answer, rather disappointingly, to that question is no, I wouldn't do it again. I think it was just incredibly hard, incredibly difficult. And I wouldn't probably advise a young Richard Leftley to embark on the journey. However, having said that, I think it's needed, right? Like, I mean, providing a safety net to people is really in the heart of what we're supposed to be doing as an insurance industry. I think we've learned a lot. So the model's changed, kind of interesting. And I was looking at this the other day, interestingly, my understanding of what was broken, right? So, you take a step back and you say insurance companies have been around for an awfully long time. Insurance companies have been around in Africa and Asia for decades, since independence, 30, 40, 50 years, and longer before that. And yet 97% of people still don't have insurance. So the answer is not, let's leave it up to the insurance companies. Something else has to change. And so I think that there is a need for these kind of companies like Microensure, who come along and design products and customer journeys, and then get involved in selling the product and educating the customer and collecting the premium and paying the claims. And that's needed. But the economics of that model is really difficult. And so I think as Microensure, where we got to was after 20 years, we realized okay, we are needed. We've been a broker, we've been a call center, we've been a technology company. So we've kind of been doing the same thing. We've been trying to address the weaknesses that we see in the market. But the thing that we've been trying to fix is how we get paid for the value that we create. And as Microensure, we kind of got to the point where we discovered that actually the only way to make the economics work would be to become an insurance company. And that way we could then have a kind of end-to-end, we could create the products that we were selling, and that way we wouldn't be kind of begging for a few, a small commission from the insurance company for all this work that we were doing. We would actually be able to control kind of the entire value chain. And so we set about trying to become an insurance company. We thought, or I thought, maybe the way to do that was to get into bed with a really big insurance company, one of the big insurance companies, and have them buy us out. And then we'd become like their kind of specialist business unit. But actually my experience of that was pretty negative. Certainly, I think the head office teams were fully on board and fully aligned. But when you got down into the countries and the people that you actually needed to do the business, in the operating companies, there was just a massive disconnect, and they just didn't seem that interested really in actually in doing this business. Partly because they were being shouted at as well to grow the revenue, and microinsurance is, we're selling products that cost 3p to a pound, so you can sell an awful lot of those, but it doesn't really move the needle on the revenue scale. And so there was this disconnect, and I think we needed to become an insurance company, and probably doing that with one of the big insurance companies just wasn't going to be realistic. And so we just announced on the 1st of July, we've tied up with a much smaller insurance company, a reinsurance company in Anguilla, who, compared to the big guys, is absolutely tiny. But they have the right mental attitude of, okay, let's give it a go. Let's launch these products. We'll learn as we go. And let's find, in many ways, they've got the mentality of how do we say yes rather than how do we say no.
I would be remiss if I didn't ask you why you would tell that 28-year-old Richard Leftley not to do it. Why would you say not to go into microinsurance?
I think the path that I have been fortunate enough to walk was so narrow and so dangerous. And the chance of success a second time, I think, would be almost impossible. And therefore, that's why I would advise against it. I mean, I look back on that 28-year-old Richard Leftley. I mean, I set out on this journey with a promise of $50,000. That was the funding that we started the company with. The chance of success, the chance of knitting together all of the necessary partnerships, all of the necessary components that were required to get it launched, to get it successful, to get us to the point where we're serving 65 million customers. The chance of replicating that again is tiny. It's a one in a lifetime. So I would advise not to do it. But I mean, I think that the good news, I guess, is that if I was 20, instead of being a time machine, if I was 28 now, there's an awful lot of things that we could learn that we wouldn't do again, right? So there's a lot of stuff we can look at and say, well, okay, if I wanted to do this again, then I wouldn't go down that avenue, I wouldn't go down that road, and I would just start by doing, this different kind of business model.
In a previous conversation, you talked to me about your own history in raising money for the company as well, and I think you talked a bit about the stuff you did with the money that you secured from the Gates Foundation. And I think many people who might be listening to the show are kind of early on in their insurtech careers, are trying to raise money. Maybe you could just tell us a bit about your experience there, what happened in raising money there, and what you learned about the big bad world of buying and selling and raising cash.
Yeah, well, I mean, I guess over the 20 years, I've raised about $200 million. I totted it up the other day. So $200 million in grants, in equity, debt. It's been a long old road, and there's been a lot of stuff that we've kind of been involved with, or I've been involved with. In the early days, as I said, it was predominantly philanthropy. This was not an investable business. This was early stage. This was kind of almost pre VC, and that's where we went to the Gates Foundation. So kind of what we did was, well, to begin with, it was financed by kind of donations from wealthy, well-to-do individuals who felt that there should be the creation of this thing, these safety nets for people. And that got us to the first kind of million customers, that enabled us to kind of get started. And then when we got to kind of 1 million customers, enabled us to go and have a conversation with the Gates Foundation. And I remember very clearly, I think it was 2003, 2004, and it became very clear to me that I needed to get the kind of horsepower of someone like the Gates Foundation behind what we were doing. I couldn't finance it anymore in small checks from wealthy individuals. You needed the raw kind of checkbook size that the Gates Foundation can grant you. I think we were looking for a couple of $1 million at that point. And I remember kind of trying to get on their radar screen, and it was incredibly hard. They were interested in financial services for the poor. So they did have a thing called, I think it was FSP, Financial Services for the Poor. But they were predominantly looking at credit and savings. They didn't really, they hadn't really yet started to look at insurance. And so I knew I had to get them interested in insurance, and I kind of found out, where they were going to be. It was possible to work out at that point, that there was this conference, and they were going to be at this hotel or whatever. And I just went and camped out at that hotel until I, and I had an idea of who these people were and what they looked like, who worked at the foundation, and just went and sat there. And in one instance, I think I sat there for 2 or 3 days, and it just literally kind of, incredibly uncomfortable. And I just sat there until I got to speak to them. And I got to speak to them and told them, we're doing insurance. And they said, insurance, that'll never work. And I said, well, we've got 1 million clients. And that kind of got their attention. And so it led to a kind of an 18-month conversation where, they got interested, but then said, okay, well, we'll have to float an RFP and get other people to apply, and so they kind of looked to me, and I helped write the RFP. And then I applied for the RFP, and then I got the money. And it was a really bizarre one, because and I'm not sure I should probably share this story, but it's funny. It's too funny not to. And this was, by now it's kind of, the 2007, somewhere around there. And the world, this is before kind of Lehman Brothers, right? Before the kind of .com, and the world goes into recession. And the Gates Foundation had a problem. And the Gates Foundation's problem was that they couldn't give money away fast enough, because in order to maintain your kind of charitable status, you had to give away a certain amount of your kind of money. And I went to see them, and they said, look, we like what you're doing, we like what you're thinking about, but $2 million is too small, right? We can't write a check for that. So I was in the meeting, and we just moved the decimal place, and we called it 25 million. So I was asking for 2.5, and we moved the decimal place and pushed the application back across the desk, and it said 25, and they said, well, that'll do. And I walked out that meeting with $25 million. And I remember calling my wife and saying, we got the money, and being absolutely terrified, because at that point our annual budget was $250,000. That's what we were spending a year. And the following year I had to spend 5.5 million, and I had no idea how I was going to do it.
Huh. That's a wonderful story. Thank you for sharing that. And what I hear from that is, I love the idea of a young Richard Leftley sitting in waiting in the reception of a hotel, waiting for somebody to appear, and just stalking, and then finally getting the opportunity, and happening to be really brave and brash and step forward. And I hear in all of that, there's some bravery and some courage, and I can understand why that must be thoroughly exhausting in so many ways, to just get to a point where you can get the support that you need to start selling these products to people who actually really, really need them.
Yeah.
And
well, I don't have many redeeming personal characteristics, but the one that I have, which is useful if you're going to be involved in startups, is just refusing to ever give up. So I can't tell you how many times people have told me along the way that I'm mad, it's stupid, it will never work. I've met, like, for every one person that's been excited by what we're going to do, I've met 100 who've told me that I'm mad and it will never work. And I've just, I think if you look at Microensure, what we've done is we've just kind of like said, we're sure that we're sure that we're right about what's broken in the market. But clearly, if you look at Microensure, it's a story of a company who has said, okay, we're going to try and address these market weaknesses by being a broker. And then when we get smacked down and fail at that, we say, okay, these are the same weaknesses that we saw before, but we're going to now be a technology company. And when we get smacked down, we say, okay, same weaknesses, but now we're a call center company. We get smacked down. And guess what? We're now an insurance company, right? And you know what? I hope we don't get smacked down. I really do, because I'm kind of running out of things that, of ways of addressing the same 4 issues. So I'm hoping this is it.
Richard,
but if it is, then I'll do it. I'll get back up and we'll just keep going.
Yeah. And I wonder, you said something earlier on, you used the word passion, and I suppose like my question was going to be, why is passion important in work? Is it important in work? What are your thoughts on that?
Oh, I hope it's important in work. I mean, if it's not, then life's we spend an awful lot of time at work. I don't know. I do. I'm sure you do too. And we spend a lot of time sat at our desk. So for me, finding something that I'm passionate about, and I think that goes right back to the beginning, doesn't it? I mean, I think I said I didn't really want to grow up to look like the people that were my bosses. And the reason for that is because I couldn't get passionate about doing their jobs. I couldn't be passionate about that's what my life is about. I mean, my life is, I enjoy my life because I'm doing something I feel passionately about. I'm helping people. And I mean, for me, William, I mean, look, every time I get a bit run down, every time I get a bit kind of like despondent, I think, okay, well, I'm going to be going on a trip, next week or the week after, and I'm going to be in Pakistan or Bangladesh or wherever. And I just make sure I go spend some time with the clients that we serve. And, I eke out half a day and I kind of go and hang out with them. And it's really hard to come away from those interactions and not have a fire in your belly, because frankly, the lives that these people live, the lives, the risk that they face every single day is just, it will be inconceivable to us, in the West. And so you come away from those interactions and you have a new resolve to double down and do something, right? And to be useful to humankind. And that's what it's about for me.
So I wonder on that, actually, what the younger Richard Leftley would say to you about that passion and about that, if you said don't do it. And I can identify a lot. I mean, I'm an entrepreneur myself. I mean, I'm certainly not selling stuff and selling products to people who are experiencing the very lives that you're talking about. But there is something about getting beaten down, to be an entrepreneur, that is just part and parcel of running your own business, of giving something a go, starting a new project, starting a new product, and trying to get it to work. There's so much failure involved and so much fatigue at times with that process. So I can entirely understand also why, looking back, I may also think the same at times.
The young Richard Leftley, if the old Richard Leftley showed up, would tell the old man to get out of his way and just but I mean, if you're not willing to have a bit of failure, then don't start out on the journey. Definitely, that's absolutely true. But I think what's important is, and it's not all about failure. I mean, it is about learning from those mistakes, learning from, and actually for me, there's a great deal of joy in learning from those mistakes and having a bit of a laugh about them. And thinking, why did we do that? I mean, I remember one of the first products we ever launched in Zambia was a life insurance, and it was called Ntula, and it was for one person and 5 family members. And we thought this was a fantastic product. Because it was the first product where it covered 6, it covered these 6 people, and African families were quite big. And what we hadn't realized was that, in the weeks and months before we launched the product, there'd been a huge number of stories in the local newspaper about kind of black magic. And of course, 6 is this number which is kind of linked to kind of black magic. And so when we launched our product and it was to do with death, everyone assumed that we were witches. And so we had a riot, and people, literally kind of like we had to get kind of, evacuated from this small town because people wanted to kill us. So, there's kind of like these kind of hilarious kind of, how did we get it so wrong? We were here to help people and they wanted to kill us. I mean, so we've made so many mistakes along the way. It's been, and some of them are genuinely kind of weird and wonderful.
Wow. I think that's what I've loved about some of the stories you've told me in the past, and this idea of working in emerging markets, is that so much of the sanitization the homogenization and lack of risk is gone from operating in Western markets. And there's actually a visceral experience, I'm sure, to be in those markets where, like you said, if you get it wrong, it can be really dangerous, right?
Yeah, totally, yeah.
And maybe that's also what makes it so difficult for insurance firms in the West to actually get involved in those markets. And that actually makes me think about parametric insurance, and one of the I wanted to talk to you about, because parametrics in the insurance industry, for those of listening who aren't insurance bods, parametric insurance is a different type of insurance. It's been around for a long time, but it's basically a payout that happens based on some predefined metrics or scores or criteria, whereas traditional insurance is indemnity based and it's about covering the loss you actually experience. So a loss adjuster comes along and claims for that. But we parametrics are very cool at the moment, and I remember talking to you about that a while back, and you told me about your experiences, and you've been using them for a long time. So maybe you could just tell me about your experience of working with parametrics, and if you think there's something that could be useful for where we are right now with COVID and various other things. So yeah, what are your thoughts about parametric insurance?
Well, yeah, we did our first parametric in 2004, so a long time ago. And it was for smallholder farmers who were growing groundnuts in Malawi. And the parametric was related to rainfall. So what we worked out was that rainfall was linked to yield. So if there wasn't enough rain, then the groundnuts didn't grow, and then they didn't have a harvest. And if they didn't have a harvest, they couldn't sell it for money. So the proxy, the trigger was rainfall, and rainfall was the proxy for harvest or financial gain. And therefore, we were using rainfall as a way of automatically triggering a kind of payout to the farmer. Of course, parametric kind of cuts back to the whole conversation that I've been talking about around the customer journey. It's a way in which you can exceed the client's expectation, because you don't even have to make a claim. So parametric basically is an automatic trigger that says, hey, your plane was late, or there wasn't enough rainfall, or the wind was too strong and therefore there must have been some damage, or there was a flooding event or a landslide event. And so it means that the client doesn't even have to make a claim. It just automatically happens and they get sent some money. And that's a great way of delighting a customer. I didn't even have to make a claim, and they sent me some money because they knew that there was some damage, and therefore I needed some money. So it's a fantastic way of kind of smoothing out this customer journey when it comes to claims. I think, unfortunately, within the micro insurance setting, when you say parametric, it normally ends up resulting in some kind of weather insurance for smallholder farmers, and those products have been problematic. Although we have been trying more recently to use parametric for other products, which I'm much more excited about.
Like what?
Well, so firstly, I think in my head, micro is being redefined a little bit. So micro, of course, means low-income people and middle-income people in emerging markets, and we're selling them kind of low-value or small-ticket insurance. So we're selling them insurance products with a small payout and a small price. But micro also means, increasingly for me, it means insurance to people like gig workers who might want to buy insurance for a short period of time or for a short distance. So some of the most recent products we've done have been things like individuals who may be white collar workers during the day, but in the evenings they want to be a personal trainer in a gym, and they don't want to buy professional indemnity insurance for the whole year. They just want it for 30 minutes or 60 minutes or 90 minutes whilst they're doing a personal training session. Or people that are involved in traveling across country. So a lot of our clients travel. They run these small businesses, and they sell tomatoes or they sell commodities, but they have to travel around the country to buy those products, and they're very affected by bus journeys being the buses they travel on break down quite often, and when they break down, it's not like an hour, it can be a day or a week that the bus takes to get fixed. So it has a huge effect on them. So we're looking at parametric around travel. We're looking around parametric around kind of gig workers. So if you use your bike or your motorbike to give people a lift, and you work for Uber, and then you suffer a breakdown, being able to tell that someone that they normally are moving between 6 o'clock and 9 o'clock, and then seeing that actually they're stationary, you know that the fact that they're stationary means that they're not going to be earning money. And is that because they've broken down? Is it because it's raining? Is it because there's no business? It doesn't matter. They're not earning money. And so having a parametric trigger that says, okay, I can track you and you're normally moving between 6 and 9, and therefore, you tell me that you normally earn $3 a night. Well, I'll pay you $3 tonight because you're not moving.
So parametrics are a great way to be imaginative with products, reimagine the way that you can serve your clients, but also the distribution process, the customer experience sounds like it can be very, very immediate, very smooth, very directional in terms of getting the result, the over delivering to a client pretty quickly.
Absolutely, yeah, you hit the nail on the head. I mean, it's easy to imagine creating an insurance product and selling it. The difficult bit is always, how do I pay the claim quickly, consistently, and in a way that the client feels delighted about? And parametric opens up a whole range of ways of doing that.
Because you're working in a sector where, in microinsurance, where it's probably fair to say, you disagree with you want, but it's fair to say that there's more meaning. You feel like the people who are coming to your company maybe have more sense of meaning, that they're helping underserved, they're helping people in emerging markets who have very different needs. When it comes to growing your teams and hiring people, do you have to look for a different type of person, or do you attract a different type of person because of that? So can you tell us a bit about your experience building teams for a company like Microensure?
Yeah, and I wouldn't say I'm great. I'm an expert in it in any way. I think the honest answer is that the good news is that an organization like Microensure probably attracts a certain kind of person. Because there are people that want to work in a social business that's having a positive impact, and that they get that kind of sense of achievement. And I think we probably attract those kind of people, and so we have a bias towards them. I think what we're looking for increasingly, and it's kind of interesting, is we're looking for people that can just have that kind of yes, I can do it kind of mentality. So we recently did some work with our team, and we did a kind of all these kind of analysis, and we were obviously trying to map out kind of who were the people in our team, depending on whether they were people, extroverts, introverts, or whether they were detail oriented or they were kind of, big thinkers. And, we're plotting them on these kind of scales, and we use kind of 4 colors, so we use red, yellow, green, and blue. And we put people in these categories. And the reason we do it this way is because, it cuts across different cultural boundaries, and it helps people with different languages to understand kind of where they fit in. And it was really interesting because we've got a real spread of people, but of course we're a sales-led organization. So, a lot of our senior leadership is quite sales kind of led. And it's been really hard to find people that are kind of sales-driven, but also compassionate. And have that kind of desire to actually serve all people, rather than just kind of hitting targets and things like that. And so we tend to look for people who have a kind of can-do attitude. And it's interesting, quite a lot of the people that come into our organization end up staying with us for quite a long time. And I think the reason they do that is because once we've hired someone who's got a kind of like, a kind of can-do mental attitude, they quite often start off relatively junior positions and end up being country managers. So end of last year, we had our kind of country manager in Ghana who'd been with us for 7 or 8 years, kind of say, look, I think it's time I stepped aside and went and helped my family run the family business. And we looked internally and we realized that actually, the person that we wanted to kind of promote into that role was another woman. So the lady who was running the country was stepping aside. And the most obvious person to replace with was a local woman who had joined us straight from university as a kind of claims clerk, and had worked her way through the organization and just was such a go-getter, and we put her in the role. And I said to her, look, we're going to put you on probation here and give you this role. And we're in the middle of COVID lockdown. And I said to her, look, I need you to go to the regulator and get this letter, because we need it. I understand it's lockdown. I understand that the regulator is working from home and therefore it's going to be difficult. And she said, no, not a problem. I'll get it for you today. And I said, look, don't overpromise, because, you don't know that. She said, no, I'll get it for you. And in an hour, she had a letter signed from the regulator. And I still to this day don't know how she did it. I don't really mind how she did it, but she did it. And that's the kind of people that we're looking for. People that just kind of say, look, a lot of people would say it's impossible. The regulator's working from home. He's not going to sign a letter. But, she just went, and whatever she did, she went and she she got it done. So
It kind of reminds me of a young man sitting in maybe the reception of a hotel waiting for someone to turn up. Yeah,
I do like those kind of people who refuse to give in. Who just refuse to give in and just keep
do
going.
as well. That's what's beautiful, and that brings to mind actually a lot of people who are probably listening to this are in either Switzerland, the UK, and the US, and might be asking themselves like, how hard is it to have a team that's all over the world? Because I haven't actually mentioned that your business are people all over the world in distributed markets. I mean, God, you've been distributed before it's been cool to be distributed, right? How the hell do you manage that? Different cultures, getting stuff done. Is it any different, or are people just all the same? What's been your experience on that?
Yeah, I think people are remarkably similar. Of course, there's cultural differences. I think though that what we've done is we've tried to keep our kind of Western leadership really small. So we've only ever hired people in the UK if we couldn't find out if there are those people in the countries. And the biggest mistakes we've made is where we've overhired in the UK, and we should have been hiring in Pakistan or in India or Ghana or Kenya or wherever we were. And we've certainly never hired expats and had the expats run the countries. We've always trusted the locals, and the reason for that is because the locals understand their culture. We're never going to understand their culture in the way that they do. And so I think just being respectful. Have we got it right? Have we got it wrong? I think we've probably got it wrong more than we've got it right, if I'm being honest. And it's really, really hard. But I think ultimately, there are some just common human decencies of respecting people and trusting them and not kind of putting them down. And a lot of a lot of people that I speak to in our organization just like working here because of that. I mean, I've had people tell me that it's the first organization they've ever worked at where, they haven't had to kind of jump through hoops for their boss to get a promotion. They just get promoted because they're good at what they do. And I think when people see that, it attracts others to it. So for us, working remotely, it certainly has its challenges, but I think it's about it sounds really cheesy, but it is about relationships. It's about taking the time to actually get to know people as a person and respecting them as an equal and demonstrating that just over and over and over and being genuine about it. And then that becomes part of the culture of the organization. Then it's, literally it doesn't matter where you're from or what your name is. If you can do the job and get it done, then you've got the job.
Fantastic. It's good to hear that. And I think maybe often it's just a case of giving it a go, right? And I certainly say to people that I'm advising them to hire is, you got to know what you want. You got to know what competencies you want, but you've also got to be really clear on the values and the motivations. And I'm a believer that those values and motivations are universal, no matter the country or where you are from. And if we can treat people like people and be consistent in understanding what we look for, and then treat them with respect and give them the opportunity and the responsibility, then you usually can get a hell of a lot done. I can't profess to have worked in your markets, but I know I've certainly worked interculturally all across Europe, North America, and in Asia. And I've been astounded by the fact that people are just people trying to get by, trying to do these things. And if you just listen out for those values and those competencies and the right motivations, you can build great teams no matter where you are.
Absolutely. I have a bit just on that. So in the Philippines, it's very common for people, they call anyone, they call the people from the Philippines, but they also call foreigners kind of sir or ma'am, right? And so if you're their boss, they call you sir. And of course, I find that really, really difficult. And so I've told them that I don't want to be called sir. So they then had a big problem with that because they like to like to show respect. And so they changed it and they said, okay, well, we can't call you sir. And so they started calling me chief, because then, chief is, I'm not offended by chief. So then I started calling them funny names as well. I can coming up with like your lordship and yes sir and all the rest of it. And we had a lot of fun with it, and it's kind of, I think sometimes you've got to be I've got to respect the fact that the Philippines want to show respect to their boss. That's important to them, part of their culture. And they've got to respect the fact that I don't like being called sir, because for me it comes with a whole bunch of baggage being called sir by a Filipino. I don't like that. And so we've both accommodated each other, and I think that's a good thing to do.
Yeah, that is very true. There's a type of humility in there and integrity. And You've got to stick to what you believe in some ways, but also accommodate the beliefs of others in the best way you can, and maybe a bit of fun.
Yeah.
It's probably a good way to do that. Well, I'm mindful of your time, but I would just like to kind of finish up asking you a couple of kind of quick fire questions, I suppose. Who has really influenced you in your development?
Well, I mean, for me, be some of the clients. I mean, that sounds cheesy, but a lot of the products that we've developed have come from these very, very harrowing experiences of sitting with a mother who's just lost a child, and hearing her story and realizing that we've got to do something about this. And so health insurance was a product that I felt we would never ever be able to do, but that I made a promise to a woman in a slum in Bangladesh 10 or 15 years ago now. And I promised her we'd find a way to do it, and we have, and we've done that. I would also say that people like, we've interweaved a lot of kind of behavioral economics. That's been really, really critical to our success, understanding behavioral economics. And so, some of the guys that are working on the behavioral economics side, like Dan Ariely, who are really kind of masters of this, have really helped us in our thinking.
Behavioral economics. What's your quick primer to a behavioral economics for those out there who've never heard of it before? What is behavioral economics?
Oh, behavioral economics is understanding how humans think about product and price. So, for example, when you walk into a restaurant and pick up the wine list, and the cheapest bottle of wine is £12, and there's one of those, and then there's a whole bunch that are 13, 14, or 15 pounds, and majority at that price, and then there's a few that are 25 going up to 35. And so what you've just done is you've just anchored that the right price for a bottle of wine is somewhere between 12 to 35 pounds. Guess what? Which one sells the most? Well, it's the one that's at 15 pounds, because basically you don't want to buy the cheapest one because you don't want to look like a cheapskate, but you also don't want to spend 35 pounds on a bottle of wine. So you end up buying one that's kind of like not the cheapest, but not the most, but it's in that kind of 15 to 18 pounds. That's what they sell. And most restaurants don't even have the £12 bottle of wine or the £35 bottle of wine. They just have it on the list to give you the right anchoring, the anchor points of what a bottle of wine should cost in this restaurant. And the same is very, very true for insurance. These people don't have insurance. They don't know what the product should cost. So quite often we end up with a product which we don't actually want to sell, but which anchors them in terms of, okay, well, so the product should cost somewhere in the region of 50 cents to $1.50. Okay, I'll go for the dollar product, So it's things like that. It sounds very obvious. We could spend another hour easily talking about behavioral economics, believe me.
Yeah. Do you have if someone wants to find out more about that, I'll put some links to some presentations on behavioral economics. Do you have a book or a primer for someone that they might look at that? Something you'd recommend?
Oh, well, I mean, the go-to, the Bible is a book called Predictably Irrational by Dan Ariely, and that's a great starting point. That's the kind of 101 kind of entry-level book on it. Yeah. Okay,
brilliant. Thank you very much. So this is kind of a neat lead on for me, really. What are your sort of top 3 book recommendations? And it can be anything. It can be some like stuff you like reading for fun. It can be stuff you like reading for business. What are your sort of top 3 book recommendations, Richard?
Well, the 3 books I'm reading at the moment, I think are the ones I could recommend. So I'm reading The Economist Obituaries. So I don't know if you read The Economist, but at the back of The Economist, every week there's an obituary. And some of them are for very famous people, some of them are for people you've never heard of, but they pull together, every so often they pull together a book of the obituaries. And it's fascinating it sounds a bit morbid, but I love reading about people and what they did in their lives and the decisions they made. And some of them very dark, kind of sinister people. Some of them are incredibly joyful, amazing people that kind of change the world for good. And some of them, it's people you've never ever heard of. And you just think, wow, like it's fascinating what people achieved in their lives. So I love reading obituaries. That's a bit of an odd one. I'm also reading a book by a historian about the fall of Berlin at the end of the Second World War, which is fairly harrowing, actually. It's a fairly harrowing read. It's not a joyful read at all. And then I am actually reading at the moment Barack Obama's Audacity of Hope. And the reason for that is because my teenagers read it and loved it, and they were teasing me that I'm not woke enough. So I decided to read that.
We're going to end on a positive one there, because Economic Obituaries, The Fall of Berlin, and that Barack Obama's Audacity of Hope. Thank you very much for that. Where were people going to find you, Richard, if they want to reach out or connect with you? Where should they find you?
Sure. I mean, the best place is probably through LinkedIn. I'm pretty active on LinkedIn. Do read my messages and get back to people, or they can just send me an email. So old-fashioned, I know, but kind of Richard@microinsurance.com.
Brilliant. Thank you. Richard, I'd just like to say thank you so much for the time that you've given me today. It's very much appreciated. Thank you.
It's been great to be with you. Thank you.